Buying your first home can be so exciting, but can also feel so overwhelming, especially if you don't know what to expect. There are a lot of steps, credit checks, loans, inspections. It's so easy to miss something important. But do not worry. In this video, we are breaking down the essential steps that every homebuyer, first-time homebuyer, needs to know so that you can make a smart and confident purchase. So, tip number one. Assess your financial readiness. This is a big section, but before you dive into the housing market, evaluate your financial situation. First of all, what is your credit score? If you have a higher credit score, fantastic. That can secure better mortgage rates for you. Obtain free copies of your credit reports from the 3 major bureaus like Experian or Equifax or TransUnion, and address any discrepancies. Then think about your down payment. Aim, if you can, for a substantial down payment. That will reduce your loan amount and avoid private mortgage insurance. While conventional loans may range from as little as 3% down to a larger down payment of, say, 25%, there are different things that you can consider and we'll help you find those. Your lender will work with you on that. Closing costs. These are fees that you need to think about and know about in advance. They typically range from 2 to 6% of the loan amount, and they cover expenses like title insurance, appraisal fees, inspections, things like that. So plan for these additional costs before you begin to avoid any surprises. Number 2, you want to determine your budget. Establish a realistic budget by considering your income and debt. Calculate your debt-to-income ratio to understand how much mortgage can you afford. Aim for a ratio below 36% if you can to ensure financial stability. And as far as additional expenses, you need to think about property taxes, homeowners insurance, maintenance, and utilities. Those are going to be factored in your monthly budget.
Yes, so tip number 3, explore your mortgage options. It's a really good idea to check with as many as 3 different lenders if you have the time. Why? Because different lenders have different programs, different specialties, and of course, different interest rates, fees, and programs, which can vary greatly. So again, it's good to do this early in the process so that you can find the best loan and be available and ready when your time to, you find that right house and you're ready to purchase. Also, you need to familiarize yourself with various mortgage types. There's conventional loans. These are not insured by the government. These loans often require higher credit scores and down payments. Some of the government loans, like FHA loans, are backed by the Federal Housing Administration. What these really specialize in is getting you low down payments, as low as 3 or 3.5% to make that purchase. But just know if you go with some of these, you're gonna be incurring additional costs elsewhere in the form of private mortgage insurance. VA loans are a great product available to our active and retired veterans and active duty service members, and they offer amazing favorable terms and oftentimes no down payment. Tip number 4, get a loan estimate. Once you've explored your options and talked to a few lenders to make sure you're getting the best rate and loan available to you, you should get a loan estimate. This will help you understand the cost of the loan, such as getting an appraisal done and any other lender's fees they're going to tack on that would be part of your closing cost considerations.
Tip number 5, get pre-approved for a mortgage before you go house shopping. Securing your pre-approval will give you a clear understanding of your borrowing capacity. It also strengthens your positions when making offers. It involves a thorough review of all of your financial documents by a lender. Sellers want to know that you're capable of making that purchase. So this is a key piece. You must get this done before you present any offers. Number 6, research first-time homebuyer programs. There are a lot of them out there. California offers several programs to assist you as a first-time homebuyer. For instance, the California Housing Finance Agency, CalHFA, provides down payment assistance and favorable loan terms. That's fantastic. Or the FHA, which Ryan was talking about, they offer low down payment options, and they're also so accessible to first-time homebuyers. There are also, if you're willing to do a little research and sweat equity, you can look for local grants and programs. Many cities and counties offer grants or assistance programs, so check with your local housing authorities for details. You'll be surprised what you find.
Exactly. And so I just want to reiterate for those, make sure you check with your lenders. Their job is to help connect you with the right resources that can assist you with, applying for and getting coverage for some of these assistance options out there. The other thing I want to echo on that is that knowing the difference between a pre-qual and a pre-approval. Pre-qual is basically nothing. It says, oh, we've looked at a couple things about your background and information, versus a pre-approval says you're basically fully underwritten. So knowing the difference is really important. That's why it's so crucial to do this work early, because then with the right agent and the right lender, you can submit a very competitive offer and put yourself above the competition who might have a pre-qual. What a pre-qual says to us as agents is that I literally have no idea if this person is qualified to make this purchase or not. It's a piece of paper, it's blank, it's meaningless. A pre-approval says an underwriter and a bank and a lender have looked at every single piece of their information financially, and they're ready, and they are fully qualified and ready to make this purchase. So imagine if you're a seller, you get offers of the same price and terms, which one are you gonna go with? So we understand that the loan process is oftentimes not the most fun. It's fun to go look at homes and imagine, dream where you're gonna be, where you wanna live, and the lifestyle. That's the fun part. We love our lender partners. No offense, guys and gals. That isn't the fun part. How much is this gonna cost? And let's crunch the numbers and let's run credit report. But it's so critical. So do that work early. Put yourself in a really good position and advantage so that when that right house comes along on the market, you make that really competitive offer right away and you get it because your loan is so much superior and strengthened compared to your competitors, these other buyers that want that same house. It's going to help you get that home.
Ryan is 100% right. That is a critical step. So everything he said is absolutely true. So pay attention, replay that. Those are critical details when you're looking at your loan approval forms. Tip number 7 is you want to choose the right real estate agent. Just like finding a good lender is critical, it's also very important to choose the right real estate agent. Partnering with an experienced agent can provide valuable insights into the local market and can assist you with negotiations and guide you through the buying process. It is imperative that your agent knows that contract, and there are hurdles in the contract. You need to be protected. Tip number 8, voila, you get to start your house hunting. This is the fun part. With your budget and needs in mind, you can begin searching for homes. Consider factors like the location, size, amenities, and proximity to work or schools. Keep in mind, you can also buy a duplex or a multifamily property if you wish. You don't just have to buy a single family home. And then maybe you live in one side and you rent out the other. You have options.
You could also buy a condo if you can't qualify yet for that single family and then trade up in a few years' time. So tip number 9 though, review and finalize your offer. When you work with the right agent for you that you've done your homework and research on, you'll work with him or her to craft a competitive offer based on the comparable sales in the area and the home's condition. It's your agent's job to send that data to you and help guide you on what is an appropriate range to consider to offer in based on the condition of the home, what those comparable sales sold for, and what that current state of the market is. Are we in a really hot seller's market like 2021 again with the super low rates and there's 25 offers on every home? Or is it a quiet, slow, sleepy winter with no buyers offering, the home's on market for 120 days? Those circumstances are very critical and will dictate a lot on what is your negotiating room. So it's your agent's job to inform you of that and help give you the tools. Ultimately, it's your decision. We can't decide for you how much you love this house and want it. You decide that, but it's our job to give you the data to advise you based upon your interest in that home, what it will take to get that for the best price possible to still get what you want, which is the home. Step number 10 is to conduct thorough inspections. So now we're moving along this process, right? You found the home, you've got your lender, you've got your agent, but you're in escrow. It's very important now that you need to understand the condition of the home you're about to buy. So you got to schedule a professional inspection and they're going to assess the property's condition. They'll let you know if you should conduct follow-on inspections, right? Maybe a critical mechanical system, the plumbing has lots of issues, or the roof has issues. They're generalists, right? A home inspector is supposed to know a little bit or a medium amount about everything to do with the home, but they're not experts. So it's their job to sort of say, hey, the HVAC is looking really old. You should get a specialist in here to double check. And then you follow up with those follow-on conditions. So even if you are buying a brand new home, right? No home is perfect out there. In many cases, new homes can have more issues than the existing ones with the, poor construction standards a certain builder might have, or they're rushing to get as many homes off the lot. So please don't take it for granted just because it's new. They're going to have defects too. We know a very wealthy client who bought a home in Newport Coast that was brand new and it still had issues with flooding in the subterranean garage. This is a high-end community and this was a painful issue for them to deal with. So drainage should be checked among all the other issues.
That is so true. You just can never believe that just because a home is brand new, it's not going to have problems. You absolutely, as Ryan said, get an inspection no matter what. And as he pointed out, get the roof, the pool, all of the systems, and audio-visual inspections need to be done by specialists. But we go into that in other videos in much more detail. Tip number 11, understand the HOA covenants of your community. Some communities have HOA covenants and rules.
These are oftentimes referred to as CC&Rs, right?
Yes, exactly. You must know what these mean and you must review them before purchasing. You will receive a copy, but don't ignore it. It's important to read them carefully. It'll say things like you can't paint your house purple or you can't put, a 42-foot high RV in your front yard. Things like that. But you need to know the rules to make sure you're comfortable living in that community.
Exactly. So tip number 12, close the deal. You're almost at the finish line. You've done your inspections. You got your offer accepted. You're about to enter the closing phase. So this includes signing the documents, finalizing the security of that financing, and transferring ownership. The title and the deed transfers over. So you need to ensure you understand all these terms and conditions before finalizing. For example, some of these terms might be, an additional considerations you need to make. Your emergency fund. Maintain a reserve for unexpected expenses such as repairs of the home or job loss. We've already talked about there might be some additional cash for closing costs, but you need to cover for the rainy day yourself once you become a homeowner. Homeowners Association. The property's part of an HOA. You got to, as we've said earlier, you got to look through the CC&Rs, understand the dues. There might be an upcoming assessment that they're planning, which they would be required to tell you about in escrow. Long-term plans. Consider how long you plan to stay in the home and how it fits into your future goals. It's good to have a plan, but also understand life happens. Most all of our clients end up staying in their homes less often than they necessarily expect, but that's not a bad thing, right? They can sell and buy and move as they need to. But by following these steps and staying informed, you can navigate the home buying process with confidence and make a well-informed decision, buy the best home for you at the best price, and start that dream of home ownership.
Absolutely. Thank you so much for joining us today. I'm SuziDailey.
And I'm Ryan Dailey.
We're with Dailey by the Sea, and we're here to help you in your home buying process.